Attention, investors and traders, have you ever wanted to know where price is going to next? Do you wish to get rid of the anxiety and often the sheer terror of not knowing where price is going? To answer these questions, you need to understand how smart money buys and sells. Contrary to public belief, these market movers don't just buy or sell at a single point. They strategically position themselves, buying at multiple safety nets and selling at various ceilings. It's all about layering in and out of positions with precision. In this video, we unravel the smart money levels on charts across stocks, commodities, forex, and crypto to help you to think and act like smart money. Let's run the numbers. We know that no market can escape the stock market's gravity, especially the crypto market. And we've seen recently the crypto market coming down with the stock market. We're starting to see some bottoming action in here. But how are market bottoms actually forged? They're forged through capitulation events. Was this a capitulation event, or are we going to see one yet to come? Please let me know in the comments, what do you think? As we come up to our 1000th anniversary on YouTube, Kate and I would like to express our love and gratitude for you being here, and especially for your comments. And to all the masterclass students who reached out and shared their stories, there's still some time left, and the stories that you've shared are truly heart-touching. Thank you everybody for your comments. As a global family, we're all in this together. And please come share the celebrations as we head towards our 1000th video. Please feel free to leave a comment on YouTube if you would like. Now let's get back into the video. To understand if markets have bottomed out, we must know where smart money is buying and selling. Looking at the S&P 500, what we can see is what would look to be fairly random price behavior, but it's not random at all. It's price interacting with CTKS structure. How do we see this CTKS structure? We turn on the indicator, which shows where smart money is buying and selling. When we look at the S&P 500, which closed out at 43.87, we saw that it rallied from very nice levels of smart money buy support at 43.56 and a stronger one at 43.72. It managed to get above the smart money sell resistance at 43.92 and then just peak above 44.12, but it couldn't get above the smart money level at 44.20. What does it do? If it can't go above, it's going below. And we notice that this safety net around that 43.92 mark was held. It then tried to breach again this 44.12 level and also the higher 44.20, but it didn't work, and it's now consolidating. It's showing a little bit of weakness. We may actually revisit this smart money buy level at 43.72. The way to understand smart money price action is to analyze the tier 1, tier 2, and tier 3 charts. Then there's a very, very simple rule. If it's not going above, it's going below. Smart money is completely different to retail. It buys at structural support levels and sells at structural resistance levels. We know that rule. If it doesn't go above, it's going below. So we just avoid any anxiety and any fear or trepidation because we know exactly how price works. All the smart money buy and sell levels, the safety nets and the ceilings are marked up for the tier 1 charts, tier 2 and tier 3 charts as part of the service. As an investor or a trader, if you don't know where smart money is buying, those multiple safety nets and the multiple ceilings and how strong the safety nets and ceilings are and how they interact with the other charts, you're just guessing. And if you're guessing, the market will take your money. We've just looked at the S&P 500 and seen that it rejected those smart money sell areas. Now we must look at NASDAQ, the DXY, Bitcoin, gold, the US 10-year and total crypto market cap. We'll also examine Nvidia's smart money buy and sell levels, and of course across cryptos. Looking at the different tiers, you gain a very good understanding of synchronization. When we look at the Nasdaq Composite Index, which is a tier 1 chart, we'll throw on our smart money sell levels and smart money buy levels. What are we seeing? The Nasdaq found support around that 13,362 mark, found that it rallied up through a bit of fresh air, started bottoming out, or started finding resistance, I should say, around this 13,513 area. But greater and greater sell areas exist inside Nasdaq's market structure. And smart money knows this. Retail wouldn't know, but smart money does. We've seen this smart money actually reflect the Nasdaq down, and it closed out at 13,505. Do you think the Nasdaq will rise up through this smart money sell resistance or come back and test the 13,362 level? Please let us know in the comments. The journey to wealth does not come without setbacks. If you're going through a life pullback at the moment, please know that our love and healing thoughts are with you. You're not alone. There's a community, a global family, 16,000 people strong, who's sending love and healing thoughts your way. One beautiful thing to always remember, we will always get resistance in life, just like price gets resistance. It comes into an area that just naturally pushes price back, but we have that with our emotional states. Eventually, price in the markets, just like life, finds a promotional support and setup level where you can rally in to your next life rally. Each time you find yourself in darkness, you're actually building up strength. That's not an easy thing to do, and it does come with its fair share of tears. But above all, be strong. You've got this. Life doesn't give you anything that you can't cope with. If you're an investor or a trader and you're not keeping your eye on the yields, you're in trouble already. Right now, inside the markets, it's a yield-based story. When looking at the US 2-year yield, we recently saw it starting to break out. Now, what do I mean? Let's pop on the indicator so we can see where smart money is buying and selling. We saw that there was a lot of resistance for the US 2-year yield around that 5% mark, but we've seen it get broken out, come back and retest it. It's heading towards the 5.06% mark. This is a big problem to markets. It's throwing negative price potential and momentum inside stocks, crypto, and commodities. The way to think about the US 2-year yield is to understand the 2-year Treasury note yield is a financial metric that measures short-term performance of interest rates. If the Fed is seen to increase the federal funds rate, the US 2-year yield will spike up. Therefore, the 2-year is a gauge of short-term economic and monetary policy expectations. And we can see those expectations are pointing higher. Smart money investors and traders understand the intercorrelations and interrelationships between the Tier 1 charts and Tier 2 charts. They're they're vital to understand, because you're seeking to predict where the markets will go next. When we look at the US 10-year yield, we can see it was forging upwards, but now it's starting to weaken. But where is the smart money support levels? And don't forget, there are multiple safety nets and multiple ceilings. Smart money is always layering in. Retail goes all in and more at one level. Let's pop on our Tier 1 indicator. And what do we see? Maybe I'll just throw some SZs around these. Unlike the US 2-year yield, we can see the 10-year yield, and you can just look at the US 10-year yield like the mortgage benchmark rate. We can see that it currently closed out at 4.308%, but from 4.312 to 4.322, there's a massive amount of smart money buy areas, and the US 10-year yield has considerably weakened. This is really good for markets. If we see continued dilution in the strength of the US 10-year yield, and these areas have been marked up with the CTKS method since 1912, so it's not recent indicative price. We're starting to see continued weakness in the US 10-year yield, and this is really good. It hasn't managed to get above this 4.366% mark, and it's starting to lose structural support around that 4.318 level. If it can't go above, it's going below. Where do we anticipate yields could be in 24 hours? It's either going to continue to decay into this 4.287% area or get above this particular area, but that's turned into a very heavy resistance area. So that is less of a probability, but we always do our three-dimensional risk management. But so far, the US 10-year yield coming down is very encouraging. If you're liking the content so far, please smash that like button and don't forget to subscribe and ring that notification icon so you don't miss a thing. And if you're new to the community, a very warm welcome, and you might just like to say hi in the comments so we can welcome you. When looking at the DXY, the thing for us to remember is that it's all about structural levels. This is a tier 1 chart. When we pop on the Smart Money indicator, we can see that the DXY is approaching an area of substantial smart money buy interest at 103.49. The DXY found support down here at this intense smart money buy area at 103.13. And what did it do? If it's not going below, it's going above. It doesn't go below, it goes above. These particularly strong lines represent key structural elements inside each chart. In this case, the DXY element at around the 103.49 area. We would expect the DXY to start consolidating around here. That plays into the US 2-year and US 10-year. We need to consider all these charts together. This is how smart money thinks. And it could take a little while to get that strength because a lot of people only trade the chart that's in front of them. This is okay to one degree, but it's a retail trap in so many other ways. When we look back a couple of days ago, we can see that the DXY did a similar movement to this. It broke above this key 103.49 and tried to get above this 103.69, but without success. If it's not going above, it's going below. And where was the below level? It was around here at this 103.13. Could we see a repeat of that, or do you feel that the DXY will have upward momentum? Please let me know your thoughts in the comments section. It's all about active learning. It takes a lot of practice and a lot of skill to understand cross-correlation and intercorrelation between charts, but that's the way that smart money thinks. So it's vitally important for you to think that way too. We can see in the past trading session, the DXY just powered up over this smart money one sell resistance, potentially support at the moment. We're going to zoom in to the euro dollar, and this is very, very important to understand. If there's a massive smart money resistance just above the euro dollar, we would expect that the DXY could rally. If there's a massive smart money support underneath the euro dollar and fresh air above it, that means little to no resistance. We would expect the DXY to come down. How do we know what it is? We just pop on the tier 2 indicator. What we see are the multiple safety nets underneath the euro dollar. This is suggesting that the euro dollar is actually finding smart money support. We have a lot of fresh air up here until around that 108.93 level. So we could see the euro dollar just retrace all the gains that the DXY made or the DXY took out of it. Please let me know in the comments, do you think the euro is actually going to rally? And what could happen to the DXY? What could happen to yields? Because you know, what happens to the yields will inversely affect the markets. If the markets are going up, if there's a good probability that the DXY and yields are coming down. We can inversely infer what the DXY and yields could be doing by looking at dollar yen. What we see at the current time, dollar yen just wobbling around, it's looking a little bit weaker. And if we were looking at the chart like this and making up stories from recent indicative price, we would RIP our money. We don't do that. We have the CTKS method, which gives us the institutional X-ray vision on where smart money is buying and selling. So let's throw on this tier 3 indicator. Whoa! What do we see here? We see a lot. We can see that the DXY had structural smart money sell levels at that 146.46 and then even higher. These structural smart money sell levels place negative pressure into the Japanese yen. And what do we see? It's been rejecting those sell areas, getting forced down into minor support levels. The Japanese yen will have a lot of trouble getting through this 146.46 area. Where do you think the dollar yen will go in the next 24 hours? Do you think it will find support and seek to rally up to this 146.46 area? Or do you think it will decay? Because this makes a lot of difference. If you think that the US JPY is actually heading up, we would expect the euro to decay, the DXY to go up, the US 2-year, the US 10-year to also increase, and the markets, the SPX, the Nasdaq, the Dow, the Russell, Bitcoin, gold to pull back. You can see how it's important to understand the intercorrelation and interdependencies between charts. Being a lecturer in first and second year statistics for many years, I found that when my students really thought about where things were going and put deep thinking into something, they really understood it. And that's what I want for you. I want you to understand the complexities of financial markets. Instead of looking at a chart like this, where you don't know where smart money is or is not, when you have the indicator, and you can just mark up your own charts if you learn the CTKS method. You can either go to ctksmethod.org or into the masterclass. Tesla is a really popular stock with our global family. We can see Tesla coming down, jumping up, and doing all sorts of weird and wonderful things without the structure, the CTKS structure created through objective dynamic market structure. It's really hard to understand where smart money is buying and selling. So let's throw on our Tier 2 indicator. What does this tell us? Tesla was coming down through multiple safety nets. It found support around that 214.66 level, and then with such power it took out the 221 level with no problem at all, but then got just restrained by the 228 level, found a bit of consolidation and pushed through this very big smart money sell area at 233.06 to 233.63. It didn't manage to get above these multiple smart money sell areas. And when you get a lot of sell areas congesting together, this is exactly the kind of price momentum that you would anticipate. Why is that? Because so many sellers are offloading here. Remember, the institutions buy with a huge amount of money at safety nets and they layer out at ceilings. Tesla closed out at 233.18, and you can see it's just a little bit below, well, just pretty much smack bang on a smart money sell area, and there's just one slightly above it at 233.63. It's an absolute game changer if you know where smart money is buying and selling. Don't forget, smart money is not retail. Retail are taught to go all in and more, preferably with a lot of leverage, say 100 to 1 leverage or 50 to 1, 50x. That's a surefire way to blow up your account, especially if you don't know what you're doing. Institutions do everything differently. They don't go all in and more, ever. They buy at smart money levels of support or safety nets, and they sell on the way up. They know what the actual structure of the market is. And here, Tesla has been marked up with smart money support, buy and sell levels since 2010. And if you would like this indicator, just pop across to ctksmethod.org. When looking at Microsoft, many people were just freaking out when Microsoft is that a capitulation? Capitulations tend to hammer in bottoms. Oh, this could be very interesting. But what does smart money tell us? Was there substantial support underneath? Yes, there were very substantial support levels. This is what smart money does. It buys at structural support, and if price doesn't go above, it's going below. And when you get a confluence of smart money buy levels, especially when they're stronger and more clustered, the probability is for upward price momentum. And that's what exactly happened with Microsoft. Here, these smart money buy and sell levels have been marked up since 1986. As part of your active learning, please let me know where you think Microsoft will go. Do you think it will come down or go up? And what's the impact of Microsoft going up? Because you know Microsoft has very heavy weight inside the market indices. If that means the S&P 500, the Nasdaq, is coming up because they all intercorrelate and interconnect, that would tend to suggest that the DXY is coming down. The JPY is coming down, the Euro is going up, the US 2-year and the US 10-year are going down. You can see how intercorrelated and interconnected all of these charts actually are. This is the way that smart money looks at a market. It doesn't look at it like retail. It looks at a completely different viewpoint. Each month, each and every month, the Tier 1, Tier 2 and Tier 3 charts, 27 charts in total, are mapped out with smart money buy and sell level areas to show where the institutions are buying and selling. It also comes with a video on each particular chart. The video explains probabilistic price movements for the next month in 3 scenarios: up, consolidating and down. If you'd like to gain perspective over the entire month, over these 27 charts, and you can see how powerful they are, you can just pop into the ctksmethod.org. Currently, a foundation membership is on offer of just $39 a month to get 27 TradingView Indicators, 27 videos, the analysis of the up, down, and consolidation cases through these 27 charts. But that will be increasing in price by the end of September. If you want to get the foundation membership, I suggest you lock it in quickly before it's gone forever. Many people are getting very excited about Nvidia's positive price momentum. How does smart money pull people into the market? It makes something go green. How do they push them out of the market? They make something go red. After all, red is a stoplight and green is a go light. We're taught, like Pavlov's dogs, to respect those particular colors. Smart money investors and traders understand something completely different. It all depends on market structure. I'm going to pop on the Tier 3 indicator that's been marked up for Nvidia since 1999. What a good year. What do we see here? Ay caramba, poor Nvidia. When you learn the CTKS method, you'll learn the power of fresh air gaps. Fresh air gaps are areas inside price structure where no resistance exists. When we saw Nvidia come down and get caught by this 426, the safety net also at 423, and the lower one didn't even action at 413. We saw Nvidia's price just rebound from these smart money levels. As there was no resistance above, price can just jump, and that's what we see. And when you look at pre-market trading, it's filling its own gaps, so to speak. But the stock market does not trade 24 hours a day. But we're into some problems here with Nvidia's chart, unfortunately to say, at 455 and also at 460 and also at 473. These are quite substantial smart money sell areas. That is why, even though price rallied, it will probably consolidate or potentially even dip down, because these are smart money sell areas. A lot of people talk about buy the rumor, sell the fact. That particular phrase is always in anticipation of good news, and Nvidia could report very strongly. Well, at least we hope so, because if it does, that could spark risk-on behavior. If we get risk-on behavior, that is fantastic. The stock market across the board could very well rally. But we also know a smart money rule, CTKS structure overrides. We're getting into so much resistance here, and we've seen this time and time again through so many charts. When they pump up significantly into smart money resistance areas, they do tend to consolidate. They can have another leg up, but if Nvidia does not get across 473 sustainably, it's probably coming down to 425. We must bear this in mind. And when I say come down, I don't mean overnight. I mean over a period of weeks. Please let me know, where do you think Nvidia is heading price-wise from its current 456 level? But you might say, Ken, I don't even trade Nvidia. I don't care about Nvidia. I only care about my beloved altcoin. Believe me, your beloved altcoin cares about Nvidia. It may not say it, but it does. Bitcoin is highly risk sensitive. When risk comes out of the market, Bitcoin tends to reflect badly on that. And we saw a lot of risk off behavior as the US 2-year, the US 10-year, and the longer dated yields actually exploded higher. What we're seeing now inside Bitcoin, we had a bit of negative momentum. Could this be a capitulation event? Let's turn on structure so that we can see where the smart money is buying and selling. We have a smart money buy level at 25,346. Bitcoin nearly came down and grabbed that smart money buy level, but there was positive air. Inside a capitulation event like this, and it's a short-term capitulation, it may be the end of the negative downward price momentum. Perhaps we have to keep our eye on structure, but look at this rebound in price. It's literally recovered all of that negative action. Where did it find the next level of smart money buy area? Just right here at around this 25,760 mark. It came down, just panged around it, lost it, didn't go down to the next one, came straight back to it, and it's headed up to 26,298. So that's not too bad. Bitcoin is currently 26,040. If we were to see continued weakness in Bitcoin, it would not have recovered this quickly. That is quite a recovery. What these red spikes are for are to separate retail traders and investors from their investments and their trades. I'll just give you a bit of an insight. If you were fortunate enough to buy these capitulations and just trading in and out, they represent fantastic opportunities to buy. Each and every one of these down spikes is something that you would look back at and say, wow, that was a good one to enter. Either as an investor, you lowered your average buy price, or as a trader, you bought really well. Just like smart money, the CTKS method buys in layers and levels down at smart money structural support and sells at layers up at smart money structural resistance. And we've seen this resistance level in Bitcoin around that 27,297 get tapped again and again. Got a little bit weaker there. That negative air showed us that it was possible that we were coming down to this lower smart money buy area around that 25,760 level. You can always, of course, get an overshoot, but that's just a fantastic buying opportunity. If you believe in crypto and you know what it represents, which is the next evolution of the internet, to the internet of money, everything changes. Rule 656, buying capitulations is usually very profitable. You can see with what we just talked about on Bitcoin's price momentum, it's very profitable to trade in and out of capitulation events. Smart money institutions would have us fear a capitulation event. That's exactly when you should be buying. Smart money would tell you, hey, it's a red market, you better get out because, why? They're buying. There are so many rules that underpin where you should buy and where you should sell, but the number one, you must know the structure. When we look at Solana, which is an absolute community favorite, always remember that no alt can escape Bitcoin's gravitational pull. This orange line is Bitcoin because it's been orange pilled. But the concept is when Bitcoin comes down, what does Solana do? It comes down. When it came down, it came down. When is the best way to get into the market and lower your average buy price? When it comes down, not at a fixed period of time. That is just crazy. You want to look for the deepest, darkest red inside the market, because that means you're buying like an institution, and that means you're challenging fear. Fear and profitability are inversely proportional to each other inside financial markets. What does that actually mean? The more fear you have, the less profitable you will be. Instead, to get rid of fear and to create courage, what you need most of all is knowledge. Many times in the community channel, I've expressed the concept that success inside financial markets is counterintuitive. That means if you see the red light and you stop, you've just been whacked by smart money. If you see the green light and you buy, you've been whacked again. Inversing your rules is incredibly important, and I do very deep dives on this inside the masterclass. A lot of investors simply don't know how to sell, and that's where a knowledge of trading becomes very, very important. In fact, I believe it's vital. XRP is also another big favorite inside the community. If we look at XRP's chart like this, it's very hard to know where smart money is buying and selling. So let's pop on the tier 3 indicator. What do we see? We had a fresh air gap with XRP's price back on the 19th at around 50.49. That was filled very, very quickly. I hope Nvidia's price action is suggesting this kind of pattern to you. And then when we saw XRP blow through smart money sell areas, it looked very good, and the green would have attracted retail. But what do we know? Success inside financial markets is counterintuitive. What has happened to XRP since then? It's actually come down and gravitated down towards that 50.49 area. When people were up here, so far away from the 50.49 area, they would have said, it's going to the moon, it's never coming back down. But we know when there's a lot of structural overhead resistance, the sellers will gain control. We must be very, very cautious. We've seen this so many times with Bitcoin Cash, Litecoin. The list just goes on and on inside the stock market charts. There, a couple of months back, Tesla was heavily decimated, but the CTKS method showed the particular SLs, or the Stanfield levels, where smart money was buying. It absolutely rallied from there. The point is, smart money knows structure. Retail only knows emotion. That is actually Rule 657. Retail knows emotion. Smart money knows CTKS structure. Smart money doesn't get emotional. They have no interest in emotion because they understand they'll be on the wrong side of the percentage. Also, fear will keep them out of the market when they should be in, and in the market when they should be out. If you're finding yourself being emotional, you're likely to have fallen back into or be inside Zone 1 and Zone 2. These are the 4 zones and stages that all investors and traders progress through to become consistently profitable and attain meaning in life as well. Money is good, but meaning is also important. You don't want to have money without meaning. That's emptiness. Emotions reign supreme inside Zone 1 and Zone 2. Structure reigns supreme inside Zone 3 and Zone 4. Getting caught up in emotion is very, very dangerous inside financial markets, as it costs you financially. If you'd like to gain the smart money mindset and also master emotion so that you convert fear into courage, Perperatum has kindly offered a CTKS partial masterclass scholarship. If you would like to apply for the masterclass scholarship, the link is in the description of this video. Overcoming negative emotion is quite difficult because when we feel negative, we're in survival mode. When we're in survival mode, we're afraid of loss and everything is a threat. It's the threat that causes anxiety, stress, and all of those negative emotional states. It's said that professionals do not do emotion. For example, if you go to a professional surgeon to get some sort of surgery, you don't want that surgeon getting emotional over the surgery. You just want them to become detached and do the best job that they can possibly do for you. Replacing fear with courage takes time. And it's more a habit that's developed over time with knowledge and experience and understanding. That's why we have the CTKS creed, because better habits create a better life. If you're not running when the markets go red, you're already ahead of 95% of other people. And you might say, well, Ken, what happens if it's not the bottom? You know that smart money doesn't even think in terms of bottom. It thinks in terms of safety nets. The right expectations will change your entire financial future. Therefore, we must be dedicated and committed. We either win or learn and never blame. We grow in the tough times. When you grow, make a rule out of the loss that you've suffered a lesson on. To get out of Zone 1 and Zone 2, we must go through the learning process, whereby we change our mind and change our perspectives. We just gain an understanding of how the markets actually work. And this is a skill that you can then apply for your entire life and create intergenerational change. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.